Let's talk about the economic outlook for 2024. The one thing that I'll be watching is that inflation continues to drop. We've seen inflation drop by half since it peaked out in the summer of 2022. The restrictive monetary policy by the Federal Reserve is working to bring inflation down. But a byproduct of this policy is that it slows economic growth. And I think we'll feel the effects of that economic slowdown in 2024, as we anticipate growth to be flat to negative in the first half before it rebounds in the second half. The LPL research team is predicting GDP growth to be around 1% and for inflation to average around 2.8% next year. We're advising clients to be less concerned about the slowdown in economic growth and to focus more on positioning portfolios for the continued drop in inflation.
Hey there. I want to talk to you a little bit about stocks and the outlook on stocks for 2024. The current bull market began in the fourth quarter of 2023, and that's carried us into this calendar year now in 2024. Historically, going back to 1950, we've had pretty solid year or two returns in terms of when bull markets begin and the year following when that start is. So economists are telling us now that it looks like the S&P is projected to have about a 7.5% upside for this year. So while bonds and Treasury yields are expected to still be strong for this year, it's important to keep the appropriate allocation in stocks as well. Thank you.
Bonds are back. That's what you're probably hearing in the headlines. We've got a couple considerations that we wanted to just throw out there today very quickly in regards to bonds and what you're hearing in the headlines. Some analysts have come out and said that stock valuations and bonds are at parity. What they're really saying is that the rate of return that they feel like you can get in your bonds this year is going to be very similar for what you can get in the stock market. They think that you can take less risk and get the same type of return owning a bond portfolio this year instead of a stock portfolio. Does that mean that all of your eggs should be in bonds this year? You need to talk to your financial professional about that. Everybody's situation is different, but that is a consideration this year as far as looking to add bonds to your portfolio, and a good question for you to ask somebody in the financial field. Second point, what are normal interest rates? Historically, interest rates, the 10-year Treasury, which is what most lenders base their rates on, the 10-year Treasury has been really around 3 to 5% historically. So we feel like we're in a normal interest rate environment historically. It just feels a little bit more different compared to where interest rates have been in the past 10 years. But just keep in mind that 3 to 5% on the 10-year Treasury is normal. Are interest rates going up this year? They're going down this year? I guess nobody really knows, but it appears the market is pricing in some interest rate drops or cuts this year, Lastly, corporate downgrades. They are outpacing corporate upgrades. What that means is that bonds, issuers of bonds, corporations that issue bonds, their credit worthiness appears to be dropping. So it'll be very important to look at the credit worthiness of the bonds that you're buying, the corporate bonds that you're buying in your portfolio. So something to educate yourself on. A financial advisor can help with that. Obviously, there's plenty of good research out there as well. But those are the 3 points that we wanted to talk about with bonds for our outlook for 2024. And thanks so much.
What we have found year after year is that a diversified portfolio and time in the market creates the best repeatable outcomes. There are going to be time periods where stocks may perform better, bonds may perform better, but a balanced portfolio is a great way to feel comfortable about how your dollars are invested. This year could bring a multitude of things. Everybody talked about one portion of the market, but the best success rates come with those who keep their head down and continue to do what we know is appropriate, which is setting financial goals, making sure that you are well diversified, and sticking to that plan. So the outlook for everybody should be bright, should we follow some simple steps. Regardless of how you're invested, stay invested and have a plan. We appreciate you watching Market Outlook 2024.